An explosive New York Times investigation accuses California's insurance commissioner of making it too easy for insurers to drop fire-prone homes and still get the rate hikes they requested.
Yeah, consumer investigator Christine Lazar joins us now with reaction to that investigation, which I'm sure is infuriating for people who've been dropped from their insurance policies.
Well, and that's the big struggle right now, right? We need to get them writing more insurance policies, but are they doing it, and are they sidestepping the regulations we have? So the insurance industry and the state came to an agreement that insurers would have to write policies in fire-prone areas equal to at least 85% of their statewide market share. But this New York Times investigation is reporting that the insurance industry negotiated a series of loopholes that essentially allowed them to drop high-risk homes and still raise the premiums. I'm joined now by Consumer Watchdog President Jamie Court. Jamie, thanks so much for joining us.
My pleasure.
So in that report, we look at the number of the homes covered by the FAIR plan continuing to rise, even though the sustainable insurance strategy was supposed to get insurers to write new policies in the state. So do you think that strategy has been effective?
It's completely failed. And we talked about this back in 2023, that by allowing companies not to have to insure 85% of people, but to increase by 5%, the commissioner was creating an incentive for insurance companies to dump people because the regulations didn't take effect till 2025. So they had all 2024 to dump people. And what the New York Times investigation found is that's exactly what they did. By the tens of thousands, they've dumped people so that when they wanted to use the regulations to get higher rates, they could increase by a lesser amount and start at a lower bar. That was the loophole in the regulations. We called it at the time. The commissioner said it was going to work. It didn't work. And now we have double the number of people on the FAIR plan, literally double the number of people after the announcement. Very few companies have filed for rate hikes, but we know that the FAIR plan enrollment continues to go up and up and up. And the New York Times also found that there was another loophole in the regulation, which is that the way the maps are drawn, the companies can insure people in not high-risk areas, but which are called distressed areas. But the distressed areas are largely not high-risk areas. So they can use those maps to increase their coverage by 5%, not increase in high-risk areas, and still get higher rates. And so this has been a complete disaster. But for the commissioner to say it was something the companies took advantage of, it's something he negotiated behind closed doors with the companies and presented. And he was right there. He knew what was going on. For him to now say, oh, wow, the companies took advantage, he was a party to this. He's the insurance commissioner. He can't say he was bullied by the companies when, in fact, he created the system which incentivized companies to do exactly what they're doing now.
Okay, so I want to ask you about Prop 103, because you know critics, including the insurance commissioner, have pushed back and basically say that law, which was passed overwhelmingly by voters back in 1988 and was drafted by Consumer Watchdog's own Harvey Rosenfield, it requires insurers to have the rate increases approved by an elected insurance commissioner. But has it made it too expensive to insure Californians? Without enough competition, obviously rates are more likely to skyrocket. What are your thoughts on that?
Well, it's ridiculous. They're saying rates are too low. Companies in California are making as big a profit, not bigger profits than anywhere else. And when they have the risk, they're getting to raise rates. A lot of companies have just raised rates. When it's legitimate, they get to raise rates. When it's not, they don't. It's all going to be approved by an elected insurance commissioner if it's legitimate. The companies just want to raise rates without having to get approved. And what the deal was with these new regulations was it allowed them to raise rates based on very factors that were not hard and fast, based on black box climate models, based on their reinsurance costs. And it said if you do that, you will then have to insure more people. But the thing is, rates are going up. By now, the 5 companies have applied for $250 million in rate hikes, and they're not insuring more people. So we're going to get higher rates and no more insurance. And unfortunately, because the rate hikes are 7% or less, we're unable to challenge them and do anything about it. So Prop 103 has been a huge success in terms of keeping rates down. What we see now is when insurance companies are allowed to raise rates, which they are under the new regulations, but don't have the obligation to insure people, that's what they do. They drop people by the tens of thousands and they get higher rates, and that doesn't serve anyone. I mean, Ricardo Lara has totally mismanaged the situation. And if he was an honorable person, he'd step aside and let someone else who can do the job. Because for
Jamie,
the last 2 years,
hold on real
nothing's
quick.
gotten
I want to
done.
get to one last question because we're running out of time, because I did reach out to Lara's office and they gave me this statement. It reads in part, all eyes are on insurance companies right now, including mine. We built the sustainable insurance strategy with an understanding that insurance companies and interveners would prod and probe for loopholes they think they can exploit. This is not a surprise to anyone that has dealt with them. If it is, welcome to Earth. And the commissioner's office actually asked me to ask you, what has Consumer Watchdog done to address the insurance crisis in terms of availability?
We've kept insurance rates low for 40 years, and we have a ballot measure to mandate that insurance companies have to cover people who fireproof their homes. That's what you have to do. You have to tell them with a stick that if they don't fireproof people's homes, they can't do business in the state. We filed a ballot measure to go to the ballot because this insurance commissioner hasn't done his job. And we've, for 40 years, kept rates low so people can afford insurance. We need someone in this office who will enforce the law with sticks, not carrots, because the carrots aren't working.
All right, Jamie, I know you're out there working for consumers, and I appreciate you taking the time
Thank
to
you.
talk to us this morning.
Appreciate it.